Hello, everyone. Welcome to yet another episode of Transparent Podcast. We have a very, very special guest with us today. And if you want to introduce yourself, give me your name, where you're from, and kind of what you do.
Yeah, I'm Freddy Hardison. I'm a mortgage officer. On top of that, do all kinds of things around finance, whether it be real estate investing on the larger scale, or we're talking about credit, or we're talking about stocks, crypto, any of that stuff of that nature. But day job.
Yeah.
I do mortgages. So.
Okay. Mm-hmm. So primarily working with the mortgages, but you do also a little bit of this, a little bit of that.
Right.
In the finance realm.
Yes, sir. Yep.
Cool. Just for like anybody like first time viewers or whatever, could you just like in condense the little just backstory, like where you kind of grew up, and how did you get into like the finance realm, if you will?
Yeah, man. Mm-hmm. So I was born here in Colorado Springs.
Okay.
After the housing crash in 2008.
Yeah.
We moved out to Arizona. So I lived in Arizona until I was about 18, and then I hightailed it back over here.
Okay.
As quick as I could. So I've been here pretty much ever since.
Quick question.
Yeah.
So on Arizona, like where in Arizona? I've been to, I don't know if you know Gilbert.
Yeah.
Gilbert. Some shout out to the friends and family over there. They know who they are.
Yeah.
And where else did I go? My buddies from Tucson, and then I was in the Tempe area.
Okay. Yeah.
And Chandler, I think.
Okay, Chandler too. Yeah.
Yeah. So I know that little area a little bit.
So I was in Sierra Vista. If you've ever heard of that.
I've heard of it.
You know Fort Huachuca?
Yep.
So it's that little town right outside Fort Huachuca.
Oh, okay.
Yeah, little bitty town, man. There's two roads, just Fry Boulevard and, man, I can't even remember the name of it. Highway something.
Okay,
just
small
little town. Yeah. It was kind of tucked away up in the mountains, so not as hot.
Okay.
But nice little town. It just wasn't very cool growing up in because there was nothing to do. You know what I mean? But. Man, I wouldn't mind going back, to be honest with you.
Shoot, man. Yeah. That's what's up.
Mm-hmm.
So you was out there pretty much, I think you said till it was like 18 roughly?
Yep. Mm-hmm.
And then what happened from there, from 18 on?
So I was a problem child, so my parents told me to come live with my grandparents up here.
Okay.
It worked out great because it took me a little while to get my feet underneath me, but after stumbling around for a little bit, I started getting keen on the idea of being my own boss and owning businesses and things of that nature. The first one that I started, I watched that movie War Dogs. You ever seen that?
I heard of it. I haven't seen it though.
Okay, so the movie War Dogs, if you don't know, it's about those two kids who just smoke pot and sell guns to the government back in 2003, right?
Okay.
During the war and everything. So I watched that movie and I was like, I could do this. You know what I mean? This is easy, right?
Yeah.
So I actually wound up doing a ton of research. There was no handbook on how to do it or anything like that, and found how to weasel my way into being able to bid on government contracts to sell, guns. Essentially, was what I was trying to do.
Okay.
The downfall, of course, was that it wasn't 2003 anymore, and there were not contracts for 100 Glocks laying around and things of that nature. So that was my first one.
And that was pretty much like, it was just kind of just self-taught, like you just kind of like, let me kind of see if this works.
Yeah, and I mean, mostly I was just learning how to set up things like an LLC and get an EIN just kind of stumbling through that whole process and understanding how to set up a business, right?
Okay. Quick question on that. Just real quick note. So if anybody's watching, could you tell them just in general, like what is an LLC if somebody out there has never heard of it, or just kind of what that is?
Yeah. So LLC is a limited liability company. Essentially, it's just an extension of yourself to where it limits your liability. It's just the most basic business entity that you can really open. Okay. Costs almost nothing to set one up, and I mean it's not like you need any qualifications. You just go online to the county website and set it up. Yeah, so it just limits your liability. It's a little bit better than doing business by yourself. And of course, as your business grows, it needs to be an entity instead of you.
Okay.
Yeah.
Shoot. So that's a good little gem for any of you guys watching. Just a little snippet on the LLC right there. But I mean, so I know you said from Arizona, Colorado, problem child, kind of start figuring some things out. And then so like, how did you get into I guess kind of move into what you do now, or like what got you
Yeah, so after, trying that little project and realizing there was no way I was going to be able to make it happen, or at least giving up on it and going for something else, I think I probably did that, I don't know, a dozen times, right? Like with different business projects and ideas and drop shipping and marketing and stock trading and, all this and that. I actually got into the car business prior to this. And started
cars.
Just selling cars, man. Started making some pretty good money compared to what I was used to, and I kind of got hooked on that sales lifestyle,
Okay.
Because in car sales, you're just all commission, you're not getting paid hourly or nothing. So it was close enough to being like my own boss that I was cool with it.
So like you said early on, you kind of just always had kind of more of that, like, for lack of, correct me if I'm wrong, like more of a like entrepreneur mindset, where it's like you just wanted to just, whatever effort you put in, that's what you wanted to get paid for.
Right. Yeah. Okay. Yeah, I didn't want to be capped by a certain pay rate or anything of that nature. And so there was risks associated with that. Obviously, COVID hit while I was in the car business, relatively new, and I didn't know how to make money in this environment, and sales just kind of dropped down. Okay. So there was that little bit of
roller coaster, up and down.
Yeah. So, after going through that for a little while and trying to figure it out with car business, because I hadn't developed any skills anywhere else really. Kept trying to get out of the car business, couldn't make the same money anywhere else. Eventually a friend called me and said, "Hey, you need to get into mortgages instead." And I was like, "All right, I don't even know what this entails." Okay. Didn't even know that a mortgage officer was a position, Learned a little bit about it, and after about a month I was like, okay, I'm gonna give this a shot. Okay. So took a month to get my license. If you're watching this and you're interested in getting your mortgage license and what that entails, it's super simple. You can always just reach out to me on social media. You can find me at Freddy Hardison, Twitter, Instagram, Facebook. But I got my license, and now I can write mortgages. So that was a little over a year ago. Okay.
Wow. So when you got into the writing mortgages and everything, was there like a big learning curve, or did you kind of just were you kind of just watching your buddies and kind of just picked it up, or like?
There was a learning curve because you got to learn how to write a file, right?
Okay.
How to write somebody's mortgage.
Oh shoot! Yeah, I know that.
Got to put that whole deal together, understand debt to income and in the actual income itself, and pulling people's credit and everything.
Okay.
The job itself. There was a little bit of a learning curve with that. Okay. At the end of the day, I think I probably spent 10% of my time actually writing loans.
Okay.
The rest of the time is all sales-based activities. So what am I doing to go find more business, right? So that's really, as a loan originator, that's what my job is going and figuring out where I'm going to get more business from. So it's a lot of the same thing, really. It's just sales, building a network.
Networking,
networking, exactly. And then just going out and meeting the people and making it happen. So,
man, that's what's up.
Yeah.
I just had a couple little points I wanted to hit on. For those watching, could you kind of explain, like, what is, or I guess when getting into a mortgage, and correct me if I'm wrong, is like, there's certain things associated with, and I wrote principal, interest, taxes, and insurance. Could you explain kind of how all that fits into, like, I guess the picture when, like, someone comes to you, they're trying to get a home or whatever, trying to get a mortgage. Why is it important, I guess, maybe to look at those things, or like, is there any like little tips or tricks or things that you've noticed when writing like mortgages, and maybe someone, I don't know, maybe not pay attention to one of those or something?
Yeah. So, and this is for people who are looking to get a mortgage, correct?
Yeah, if they're like just first time trying to apply, and it's like, I got this much money, but maybe not see that full scope that you probably see.
Got it. So then, like, what is it that they need to be paying attention to?
Yeah.
Okay. So essentially, the key things that you got to pay attention to when you're looking to apply for a mortgage or thinking about doing it in the future is essentially, we're looking at income. Are you W-2 or are you 1099? If you're 1099, we want to see a 2-year history of that. If you're W-2, you want to be in the same industry or have some semblance of job stability where you maybe got a degree for your position.
Okay.
So you got your income, and then how much you're bringing in with that is important. You know, obviously more income helps you buy more house, but that is going to be a key piece in the stability of it.
Wow.
So then we got credit as well.
Okay, credit. That's a fact. Yeah, could you speak a little on that?
Yeah. So with credit, typically mortgage scores are going to be lower than what you see on Credit Karma. So a lot of people will be like, "Hey, my credit score is 700 on Credit Karma." You pull your mortgage score, it's lower. It's like a 680 maybe, right?
Oh, okay.
So that's a big differentiation factor. You know, I always tell people, hey, just assume that it's going to be maybe 20 points lower than what Credit Karma shows you.
Okay.
Minimum typically is 620 to get a mortgage. You know, you want to make sure you're not having stuff in collections and things of that nature.
Okay.
There's ways to get that kind of stuff removed from your credit, and we've got people lined up to help with that.
Okay.
Credit's a big factor. So
I'm glad you brought that point up. So with credit, have you had experience where, you know, someone, I guess, they like maybe checked their Credit Karma or whatever, felt that they were in a good position to buy, and maybe they recommended like, hey, maybe you can clean up your credit or something first, or maybe like take a look at these things with your finances before maybe getting into a house? Or have you had a lot of run-ins like that where just people just don't know?
So yeah, exactly. And typically it's a conversation where we'll go over their credit, their income, what money they have saved up, and what's going on with their situation. And depending, you know, if they can get a house right now that it is that they want to be in this price point or whatever the case may be, then cool, we'll go ahead and start, you know, writing the deal. But if we can't necessarily hit that because of one of those factors is missing, then we'll build out a plan and say, okay, you're doing great here and here, but this needs some work. You should be able to take care of this in 60 days, 90 days, 6 months. I'm going to check in with you. We're going to, like, we got a plan, right? We're going to buy a house. It might just be 6 months from now, and that's cool. You know? At least now we know what we're doing.
That's great. So, so definitely, like, if anyone is trying to, like, work with you or whatever, and, like, so they could at least, at minimum, sit down with you, see where they are, and, like you said, if there is, you know, an area where they're lacking, maybe come up with a game plan and still help them to reach that goal. Just help, just giving them a little structure.
Yeah. I think education is really important because most people don't know how all this works, right? I didn't know how this works before I got started doing this. So when someone is calling, you know, if I was brand new, for example, and I was calling someone asking to get a house, like, I'm a little scared because I don't know if I'm going to get approved. I don't know anything about it. Like, I don't know how it works. You know, the only thing I've ever gotten is maybe a car and credit card before. So to me, education is really important, so that people understand why they're approved for what they're approved for, how the process works. Ideally, after we finish up with a deal together, they can go write mortgages now. You know what I mean? Like, they feel confident about it. So that's the idea.
Appreciate that, man. Another thing, could you talk a little bit, what is, or just in general, like, two different things, HOA and, like, escrow, but could you just touch on those a little bit, or what?
Yeah, so HOA is, you know, Homeowners Association. Most neighborhoods, if you see, they'll have, like, a community center where maybe there's a pool or, you know, a gym in the middle of it. So somebody's got to pay for that, right? So the Homeowners Association comes together. Everybody who has a house in this neighborhood, mandatory membership in this Homeowners Association. Right? So it's a thing in a lot of neighborhoods where maybe there's lawns that need to be mowed that aren't owned by anybody, or there's a park. Homeowners associations are everywhere. You can still buy houses that don't have them. But when those are the case, there's no rules, and people can pretty much, like, they could paint their house bright green next door to you if they wanted to. Like, that might not really be what you want to look out your window and see, you know what I mean? So HOA is an additional fee. It covers things like amenities for the neighborhood, and then it also keeps your neighbors from doing stuff like having a bunch of cars out on their lawn that they're working on, and you don't necessarily want to be looking at that. So
would you say with that, you broke it down pretty good, so there's kind of, I guess, like, pros and cons to that, to where like it could be a good thing because it's like, you know, you don't have to worry about, like, maybe just most outlandish stuff, or like there's just kind of no structure. But at the same time, if you do have it and there's kind of some structure, you may have to pay like little fees or
and it's not bad usually. I mean, it can be as high as like $300 a month, $400 a month, or more. But typically, what I see is it's like $90 quarterly or something like that.
Okay, nothing too crazy.
Nothing too crazy. I mean, if you're living in a gated community, you got to pay security guards. You got to pay for the
everything,
all that stuff, right? So it's more expensive depending on what type of neighborhood that you're in.
Okay.
But yeah, that's HOA.
And then what is escrow? If you can kind of break that down, or
yeah, so once a year you got to pay your taxes and you got to pay your insurance.
Okay.
Okay, so those are 12-month policies for insurance, and then taxes are of course just due once a year, so that's 12 months worth of taxes. Okay. And we're talking property taxes here. Okay, so most people are not going to save the money to pay all that just when it comes time to pay it. Like, they're gonna get the bill and they're gonna be like, oh my gosh, what am I gonna do? I wasn't preparing for this, right? So what mortgage companies do is they set up an escrow system, and essentially they just split that 12-month policy or 12-month taxes into 12 bite-sized pieces, and they add that onto your mortgage.
Okay.
And mortgage companies like you to be doing this because it lets them know, because they'll pay the taxes for you and pay the insurance for you. They just have assurance that those things are going to get paid, because if you don't pay your taxes, the city or county or whatever could come after your house and put a lien on it, and then the mortgage companies. It's no good.
So anybody watching this, hey, pay your taxes.
Pay your taxes. None of us want to, but we got to pay it.
Got to. And I appreciate that. You definitely broke it down, and like I said, if there's anybody new, that kind of gives you like a warm and fuzzy, like what those things are. Like, and sometimes some of these terms like HOA and escrow, like what is that? Right. I appreciate that. And then too, just from your experience and everything, from getting into the industry you in, finance in general, things like that. I noticed you start doing this thing. It's like Tuesday Newsday. Could you kind of just let everybody know kind of what it is? And I know you give out like some good little like nuggets and tips and things like that on there.
Yeah, man, I appreciate it. Tuesday Newsday is just a little idea where once a week on Tuesdays I get in front of a camera and do a live stream, and we talk about what's going on in the market right now, what's going on in the economy. And like last week I was talking about what happened with the latest economic report that came out, the Federal Reserve, what types of decisions they're making, because all this has an effect on like the price of gas, for existence, the price of milk and eggs. It has an effect on inflation, how many jobs are available, and ultimately has an effect on the housing market and how easy it is to get into a house, especially if you're brand new. So Tuesday Newsday is about bringing some of that higher level stuff that most people aren't really looking at, and making it available to people who are just like you and me, who want to know, what does this mean for me?
Exactly.
Yeah. Why do I care what the GDP is putting out here? Why do I care what Powell is saying from the Federal Reserve? Right.
Yeah.
Why does this matter? That's what Tuesday Newsday is.
All right. Man, shoot, like. So y'all definitely tune in. Like I said, we'll plug everything in, just like we do every podcast. We'll plug it in a video. And I was checking a couple out, and I was like, man, like he, give it. It's like, it's pretty much, to me when I was saying, it's like, oh, just like pretty much a condensed version of like, the what's now, or like, the what you need to know. And like you said, everything you said, it affects the whole market, as far as like this affects this, which affects prices, which affects this, which also affects like real estate and money and things like that.
Right.
Shoot, man. So to just kind of wrapping it up, could you just give, if there's anyone out there watching, they're maybe trying to get into a home, if you just got any advice to someone who's just new to the home buying thing, maybe what to look for, or could you give them like some words of encouragement as far as like, I don't know, maybe stay away from this, or just consider this when looking at a home or getting a mortgage?
Possibly? Yeah, man. So I think that something that's really important to stress is that that your home is not an asset; it's a liability. Okay, so but we can turn that into an asset. As far as building wealth goes, which is really, what is going to be important to most people in terms of developing their plan. Okay. Let's see how we can turn that home into an asset instead of a liability. Let's see how you can get into more than just one house. and how you could maybe start house hacking, or how you could pick up investment properties, and how you could really start to utilize just buying your first house. So I always just say, go ahead and start looking to buy, because there's no bad time to buy real estate, because there's no question of whether you're going to make money, right? It's when you're going to make money.
Wow, I like that.
Right? So it's not if I'm going to make money, it's when I'm going to make money. So I guess it's really just 2 points. Is one, buy a house, look into it, figure out how you can do it. And then 2, don't stop there, because that's not the American dream. That is a liability. Let's turn it into an asset and start making you some cash flow and some wealth later down the line.
Man, thank you for that. I appreciate that. And lastly, man, if anybody wants to like follow you, get a hold of you, they like the content, is it anything you want to shout out or whatever?
Yeah, you can find me on all social media as @Freddy Hardison, and that's Freddy with a Y. I'm sure we can get like links for those set up, right? Yeah.
We'll get it plugged in.
Yeah, it's @Freddy Hardison. We're gonna start doing YouTube videos here soon, kind of along the lines of Tuesday Newsday.
Okay.
So that's pretty much it. Just look at my name and you'll find me. So.
Shoot, man. Hey, Freddy. Hey, on camera, I'm gonna give you a shake, man.
All right, man.
Hey, I appreciate all you guys watching. You know, he gave you guys some gems. Nothing. We didn't go too overboard, too in depth.
Right.
But just enough to cover, you know, the premise. And like I said, I'm gonna plug everything in this video. That way you can, you know, reach them, follow them, all that good stuff. And if you guys have any questions, comment below. You know, like the video, share with a friend, and hopefully someone can, you know, pick up something and learn from it. So, with that being said, we just want to thank you for another episode. A Transparent Podcast. Thank you for tuning in. We hope you guys are safe, make smart financial decisions, and we'll see you guys later. All right.